Hello everyone, introduce myself. My name is Adika Satrolubis with NPM 2341109 from Management 23 Extension. On this occasion, I will present video material about trading and international investment. Okay, the first slide, introduction. First, let us discuss international trading. International trading is the process of buying and selling goods and services between different countries. It enables nationals to obtain products that might not be available domestically or that can be produced more efficiently elsewhere. For example, Indonesia exports palm oil and coffee to many countries around the world. Japan is known for exporting automobiles and electronic products, while the United States export technology products and agricultural goods. International trade provides several important benefits. It gives business access to target markets beyond their domestic borders, increase revenue opportunities, provides customers with a wider variety of products, and contribute to economic growth and job creation. As a result, international trade has become one of the key drivers of globalization and economic development. Okay, the next slide. Types of international trade. There are three main types of international trade. The first is export. Exporting means selling goods or service to foreign countries. For instance, Indonesia export coffee to Europe countries, generating foreign exchange earning for the nation. The second type is import, which refers to purchasing goods or service from other countries. An example is Indonesia importing machines and industrial equipment from Germany to export domestic production. The third type of re-exports is occurs when a country imports goods, process or repacks them, then export them to another country. Re-export activities to often value products before they reach their final destination. Together, export, imports, and re-exports facilitate the flow of products through the global economy. Okay, the next slide, types of international investment. There are two major types of international investment. The first, foreign direct investment or FDI. This occurs when a company invests directly in business operation or physical asset in another country. For example, a Japanese company may establish manufacturing plant in Indonesia. The second type is portfolio investment. This involves investing financial assets such as stocks, bonds, or mutual funds issued in foreign countries. Unlike FDI, portfolio investors do not directly control or manage the company within the investment. The primary goal is to earn returns from divisible interest and capital gains. With FDI, portfolio investment contributes significantly in the movement of global capital. Okay, next, rise in international trading and investment. Despite the benefit, international trading and investment also include several risks. The first, exchange rate rise, currency value, currency fluctuations, and this exchange can affect profit and investment returns. The second is political rise. Government policy change, political instability, or trade recession may negatively impact business activities. The third is economy rise. Economy downturn, inflation, and financial crisis can reduce demand or lower investment returns. Finally, there are regulation rise, which arise from difference in laws, regulation, and complex requirements across country. Therefore, business and investor must careful abilities rise before engaging in international activities. Okay, the next factor affect international trading and investment. Several factors influence international trading and investment discussion. Economic factors include GDP growth, inflation rates, and interest rates. Strong economic performance generally attracts more trade and investment activities. Political factors such as government stability, trade political and international relations also play significant roles. Countries with stable political environment tend to attract more foreign investors. Technology factors are equally important as well. Digital platform, e-commerce, and financial technology have made international transactions faster, cheaper, and more accurate than ever before. This factor collectively shape the global business environment. Okay, the next slide, current trends. Today, several major trends are transforming international trade and investment. The first trend is globalization, where business operate across multiple countries and integrate global supply chains. The second trend is digital trading. Online marketplace and digital platform allow companies to conduct international transactions efficiently. Another growing trend is investment. Investors consider environmental, social, and governance or ESG factor when making investment decisions. In additional, emerging markets such as Indonesia, India, and Vietnam continue to attract significant foreign investment due to the growing economics, the large customer markets. Their trends are shaping the future global commerce and investment. Okay, the next slide, conclusion. In conclusion, international trading policy to exchange of goods and services across countries, while international investment influence cultivating capital internationality to generate returns and support business growth. Both activities contribute significantly to economic development, job creation, technological advancement, and global integration. However, success in international market requires a clear understanding of both opportunities and risks, including economic, political, and financial factors. As globalization continues to expand, knowledge of international trading and investment will become extremely important for business, investor, and future professional. Okay guys, thank you very much for your attention.